I get it. Coming out with titles such as macro trend is officially over can trigger some viewers. So here is the warning at the beginning of the video. We are only going to look at the data on the charts, just what the macro bears and bulls are doing with their money in the markets. Not my opinion, just what is on the charts. And unfortunately, it's 2023 and we have to continue to put trigger warnings on things, but don't worry, we're going to get into that data and have a look at exactly why the macro trend is officially over. Look at it in terms of the past 2 cycles for Bitcoin. And if that's still not enough with 12 or 13 years of data, we're going to look at it in terms of over 100 years of data, because this particular indicator has been used for over 100 years and continues to identify when major trends change. The indicator that we are talking about is the Gann Swing indicator. You can find a link to this at the top of my video. So there is your shill. And while we're at the shills, why not check out these crypto exchanges, which are partners of the channel. Bybit, over $30,000 of sign-up bonuses. You will have to trade on there. So stay safe, have your plans, don't use leverage if you don't feel like it, of course. And of course, BitGet as well. So these can be used by people all around the world. And for the Aussies, you've got SwiftX there. No leverage whatsoever, just spot trading. Links to all that in the description, along with what I'm talking about here, the Gann Swing indicator. Looking at macro cycles, trends have been changed and basically are confirming that right now. So hopefully I've got you into the habit of the old drill of liking and subscribing to the channel if you haven't already. This is your home of macro cycle analysis. You know, we cover the real estate cycle, the macro cycle here, along with the stock markets, commodities, and cryptocurrencies. Cryptos are our main focus for making money, but we need to understand the macro picture here. So along with this current macro picture is some of the news, or as we would call it here, noise, the announcements coming out this week from the Fed. Federal funds rate, this is the interest rates, probably looking like we're going up 0.25%. At least that's what the market is telling us right now. So this is what it was previously, and now this is the forecast. So we've got to figure out what the actual is this week. That's going to be the announcement coming out on the 2nd of February for us here, and of course the 1st of February for guys in the US. Don't forget to wish me a happy birthday. That is my birthday, 1st of Feb. Anyway, 0.25% is what the market is anticipating. So anything around that 0.25% is probably not going to shock the market. Therefore, we're going to see some ease on the bearishness. Obviously, that's the downside for the S&P, leading things up a little bit higher. That is part of the noise out of the way, looking at this macro picture moving forward into today's analysis with the macro trend being broken. So this is confirmed, it's broken. This is what we're looking at here. Remember, we were looking at market sentiment as well, especially around the lows, and it happens every single cycle. You saw it here first during the bear market. So just remember this. Any other future bear market could be 4 years into the future, 5, 6 years, depending on which markets you are trading. So what we have seen is Bitcoin will go under $10,000. It didn't happen. Now, could it still happen? Of course. You know, we're at 23.5 now. Maybe we get some black swan event. It dumps us down and we hit 12K and people say, well, that's close enough, fair enough, whatever. Previous cycle though, it was $1,000. We were sitting at 3 and everyone was calling for $1,000 because it was the previous all-time high of that cycle. And so that was the thinking around that time. Bitcoin will go under 1,000. People were waiting and waiting and waiting. And then the market rockets off by 300 or more percent from that low to that high in June of 2019. The previous cycle, Bitcoin will go under $100. You can see the lows came in around 160. So from 160 to 100, still a significant drop, but the $100 never came. And again, people just got left behind as the market started to climb out of the consolidation zone. And the consolidation zone is the big area that we're going to look at in today's video with that macro cycle break. From that low to that high where the market began to reaccumulate, so this zone here, it was about a 200% move. However, within the range of the low to that high area, it was about a 90% move. So these are the two major areas we're going to look at here. And the current indicator that I've got on the chart is the Gann Swing indicator. That's this yellow line that you see zigzagging across the chart. It's not the zigzag tool. It is the Gann Swing indicator because there are specific rules that are used to formulate the swing. As I said, this is in the top of the video description. Enough with that shield. Now, the other part to this tool is looking at the trend in the background. So that what we currently have is a uptrend and a downtrend, and the black is an uncertain trend. And so what happens is during the bear markets, it turns into the red, and then in the uncertain times where the swing breaks to the upside, it goes black, and then eventually gets into that green stage. Of course, we're on the macro, so it's going to be quite laggy, but we can drop this down to different scales, the daily, the weekly. But in this case, we are concerned with what the trend is doing, and more importantly, what swings have we currently broken. So from this downtrend, what we have just broken is that November top. So this has happened over the last few days. The month is about to close, which is why I'd prefer to leave this towards the end of the month. It is now January 30th, and the close, or the break above the top, is the confirming signal here that the macro trend has broken. If we look back at all previous cycles here, you can see the monthly swing top occurred in July 18. So this is the previous bear market. That particular break was on May of 2019. That's when the trend went from red to black. So we had higher highs because the market broke to the upside, but we still had lower lows because the market had not put in that new low yet. So that's why we're in an uncertain trend here. Eventually, the low was put in, the market went up, we got into a green, COVID happened, and then we started that trend again. We look back to the previous cycle, we can see that the monthly swing top was broken here in July of 2015. So you can see all of the monthly swing tops were down until it got broken. There was a shakeout month, the following month there in August, and then we start that very, very clean trend where the bottoms, so the swing bottoms, were not broken all the way up till that peak. And so it's a nice, easy, simple way to enter markets, trail swing bottoms, and then get stopped out at the bottom of the swing. Now, within the breakout of the monthly swing tops, we can essentially say that the downtrend is officially over, as Michael's got here on his post. But the next important thing to look at is this transitionary period. This is the point where the sentiment begins to start its shift from the bears to the bulls. And within that period, it doesn't mean that we can't drop to new low prices. I don't want to take that off the board just yet, but it is looking far more likely that we're going to see higher prices between now and probably within this sort of 12-month zone like we have seen in the past. And so that's something really important to note with the downtrend officially being over, that we start to enter a transitionary period. Within the transitionary period are still opportunities to buy Bitcoin. Now, if you're waiting for Bitcoin to drop under 10K, it's probably looking extremely unlikely at this point. However, maybe a test of the 18K range, maybe lower. There is no guarantees of any of these points. But like I've put out on the channel for many, many months now, discussing buying Bitcoin under 19,000 based on the historical Bitcoin cycle buy zones that I've labeled here on the chart for reasons that we've covered before. Maybe we have another reaccumulation zone between this 19.5 and say $28,000 BTC. This is going to play out over the course of many, many months. So there is still some patience required here. Maybe there is a purchase at these higher prices, and we over the next few months see the price fall. This is still within that transitionary period, and within the period, like Michael's pointed out here, there are almost always big moves in between. So it's still about holding your nerve in this time. But I digress. We are talking about the macro trend officially being over, not about how to make profits using this particular tool. So let's have a look at how this has happened over the last 100 years, because this tool has been around for an extremely long time. So I'm going to take it back to the Dow Jones, going back to the Great Depression of the 1930s, just with an example here. And we'll have time for the S&P as well. You can see the monthly swing tops all the way down were unchanged. They were not broken until we got to the end of that move there in 1933. So the monthly swing tops, eventually they broke down. Then you had lower swing tops all the way down. And then you had a breakout of the top in around March, April of 1933. Now, we all know from history that World War II started in 1939 and the market dropped into another low of 1942. And from that point, the market went straight up. Now, in terms of what was happening to the everyday person, it was a world war. There was a lot of crap going on, but what we are focused on is making money from the market. And this signaled that the low was in and it was time to start buying and potentially dollar cost averaging into the market. Of course, I don't need to tell you that the market was straight up from that point into the 1960s. Now, I'm not saying it's going to happen exactly the same way with a 30-year rise, but it's important to note when these signals are given that it is very likely that we are around a bottom and we're about to break through and start to trend up to a new high. Could take years, but essentially it is letting us know early on, while the rest of the narrative in the media is extremely bearish. And you can only imagine what was going on in the media in 1932, 1933 at the bottom of the market. You can imagine it's going to be far, far more extreme than what we are seeing today. That was an example of 1933, the entire bear market from the peak of 29 down to 32 and into 1933. So for some recent examples as well, we can see in 2000 we had the peak. Here are the monthly swing tops on the way down. None of these are being broken, not even by a significant amount. Then we get to the bottom before the market breaks out of that and the trend on the macro picture changes into a new top. Notice on each of these occasions, it's not to say that it needs to boom to a new all-time high. It doesn't tell us that the news narrative changes. It doesn't tell us that what is being said out there in the public is shifting. It just tells us that the money, or at least the smart money, is signaling that the market is flipping and it's time to pay attention because things could take off rather quickly, maybe slower, but essentially things are definitely changing. You had the higher low form here in March of 2003. The breakout occurred a few months later. And then, of course, we ran into that peak of 2007. Move forward to the GFC collapse from the peak of 2007, monthly swing top, the lower swing top, the next lower swing top, the next lower swing top into January 2009. And then we break out again, forming a higher low, and the market takes off from that point. Another example of this in history is 2015. We were beneath these highs for quite some time, about a year and a half before we actually took off from that point. You can see the monthly swing tops were coming in again and again, then the breakout, the retest, and the market takes off from that point. So it's telling us to pay attention that the sentiment is shifting. And fortunately, we're getting that signal towards the bottom of the market in Bitcoin. You can see it happening way down here rather than close to the peaks where it might happen in some of these other markets. Remember, this crash though was quite shallow, so it's no wonder that you'd see that signal closer to the top. Now we can see it again happening in the early 1980s, the breakout and the move away from that point, all of those monthly swing tops getting broken and the macro trend has changed. But it's really important to note that nothing has to happen 100% of the time. You can see it here in 1973 where there was a swing top broken, but then the market continued to collapse. Note the interesting difference here though is how early on it was in the downtrend, basically in that big bear market of the mid 1970s. Once that bear market finally broke to the upside, which was later in that piece, so you've been going in a bear market for over 12 months, then we start to get that move out while the news is still quite negative. So it's just to warn people that the trend has changed. At least in the case of the monthly swing chart, the macro trend is officially changing, and we could say that that bear market is over according to this indicator. But of course, with our own trading, we love to add in multiple different indicators to let us know a more guaranteed approach. Now, of course, that's the stuff that I do go through on the channel, so make sure you are subscribed, like the content up. We do have a alpha report coming out this week, just within 48 hours. So make sure you sign up to that as well. The link is in the top of the video description right here. It's a free report. Sign up to that. And also you'll get notification about our 2-year anniversary to the Investor Accelerator with massive specials and discounts coming out on that. So sign up to that free newsletter. Get that report coming out this week. Stay up to date with the content here on the channel. Like and subscribe to it. I'll see you guys at the next video. Until then, peace out.